Hey everyone. As anyone who's been watching the news in recent weeks is well aware, the economy has become pretty choppy. The Federal Reserve has become increasingly aggressive in its fight with inflation, and a variety of economic indicators are beginning to blink yellow. That, in turn, is driving uncertainty, and as uncertainty rises, a lot of investors decide it's time to move to the sidelines. But is that the right strategy? When headwinds begin to mount, should real estate investors go to the sidelines and wait? It makes perfect sense to be cautious. But on the flip side, a lot of investors stay active or even turn things up a notch when others are stepping aside. In many cases, the deals they do in these times deliver the strongest returns over the long haul. I met with one investor who closed on half a dozen large apartment buildings as the country went into lockdown for the pandemic in 2020. They literally leased a private jet so they could still get out on the road to visit properties and make acquisitions while everyone else was working from home. They told me that those are some of the best deals they ever made. So here are 5 reasons investors should consider buying commercial real estate when uncertainty is on the rise. Number 1, the commercial real estate market is inefficient. There are nuances by property type and location. One metro could face serious headwinds while another is growing. Think back to the dot-com bubble. That recession hit markets like the Bay Area particularly hard, but many other markets held up well and continued to grow. Number 2, there are always value-add opportunities. I was recently talking to a small private investor who has a deal in process. Technically, he's overpaying for the property based on the sales comps, but the seller is only willing to sell now because he thinks the market's going to fall. And by acquiring this asset, the buyer will be able to consolidate and upgrade a cluster of properties, generating a much stronger return on the entire portfolio. Number 3, it's also a good time to buy unique assets that rarely trade. These properties may only come to market when there's uncertainty. It might be because the current owner needs to bulk up their capital or for some other reason, but during times of uncertainty, some rarely traded assets come to market and there are usually fewer bidders than normal. That creates a unique opportunity for investors who are ready to take action. Number 4, some investors may see this as a perfect opportunity to reposition. A chance to sell some properties and to buy different types of property or assets in different markets to change a portfolio composition. This could be defensive to mitigate risk, or it could be to capitalize on future growth opportunities. Times of uncertainty may be the best time to change horses. Number 5, investors need to think about where things will be in the future. Where will the market demand be in 3 years or 5 years? Times of uncertainty may be the best time to lock in assets and position for the future. Just a quick note, try to get debt on your acquisitions that don't have prepayment penalties so the properties can be refinanced if and when interest rates fall. And position portfolios for where the market will be in 3 or 5 years. Investors who buy during periods of uncertainty often face less competition at the table and reap long-term rewards. I've been a commercial real estate analyst and investor through multiple cycles, and I've seen it time and again. Investors who step to the sidelines with the herd because they fear doing a deal when the market is uncertain often miss the best opportunities the market offers. Real estate investing is all about thinking long-term, capitalizing on opportunities, and keeping your eyes on the horizon.